Everybody, welcome back. Xavier here with the charts, doing a little update on the current portfolio. As you can see, currently just up almost $1,400. For those who are new to this channel, I decided to create this account for passive income, as my goal is, of course, early retirement within the next, I'd say, 5 to 7 years, as my goal is to retire abroad. So of course, I have a smaller, I should say I have another portfolio designed for long-term growth. And this one, of course, is designed for passive income, primarily through dividends. As you can see, almost have just slightly less, I say about 40% of my returns have come from dividends. And of course, this is going to snowball because, as you can see, when I first started this account, with just about $200 back in November, and we really didn't start adding anything into the account until started adding a little bit more back in the end of January. This is basically an account for the year, and we really just started adding a little bit up in July. We had just shy of 10K, and of course now we've ramped it up all the way to 27, almost 27.8K. And so the goal for this account is to add at least 2,000 a month into dividend paying stocks. The vast majority of these stocks are dividend paying stocks. And so for this particular video, what I did want to touch on was one of my newest additions to the portfolio, ABBVIE. ABBVIE is a pharmaceutical company. It makes medications. We'll take a look at it. ABBVIE makes medications for things like Parkinson, certain types of cancer, Hep C, irritable bowel. There's a wide array of lymphoma. It makes a wide array of different sort of medications for prostate cancer, endometriosis. They do use things like Botox, etc. So they make a wide variety of medications that are designed to help people, especially over long-term management of many of these diseases. Many of these diseases are managed long-term. And so for this particular company, with their medications, it provides long-term revenue for them.
If you look at our performance since our inception, really, 2013, we had revenues of $18.8 billion. We've grown that to last year, $33 billion, or a compounded growth rate of about 10%. We've grown earnings at almost double that rate, 19%. We built a very strong R&D organization, and that's going to be critical in the new ABBVIE. But that R&D organization has created 14 new products or new indications. Last year alone, those products generated $9 billion of the $33 billion. And as you commented on your show the other day, obviously we had a very robust quarter in the first quarter. So the business is actually accelerating in its growth as we move forward here. So we're doing it at a point of strength. Now, Allergan is a great company, has great products and great people. So we're excited about bringing these two organizations together. And there's a number of things that the Allergan transaction will do for us and for the new combined company. It clearly diversifies our revenue base in a very significant way. It adds a couple of additional major growth franchises to the business. So we'll have a total of 4: immunology, oncology, aesthetics, and CNS and neuroscience will be the 4 major growth drivers for the company. It clearly financially is a very important transaction and an attractive transaction. As we've said, it's accretive in year 1. It grows to 20% accretive over time. There are over $2 billion worth of synergies that we're going to extract from the business, so it'll drive profitability even higher. And we're obviously a very profitable business.
They've recently acquired a company called Allergan. And of course, that will continue, who is one of their main competitors. Like, they do things like medications, for example, like for Parkinson's, and medications for anesthesia, etc. Right? And they're utilized primarily within the US. And this company actually pays a really good dividend. As you can see, the earnings have been steadily growing. Their earnings projected for 2020 better than their 2019, and of course, for the coming year in 2021, the estimates, of course, is that ABBVIE will be doing better. When looking at the dividend, which is one of the reasons why I really liked ABBVIE, I think it's in a good spot where you can start to accumulate some shares. As you can see, the payout for ABBVIE is, of course, under 50%, which is good, which means a lot of their revenue is still available for expanding for expanding the company. As you can see, it's only about 45%. They pay roughly about a 5.6% dividend yield currently, and that dividend has been growing over the past 7 years. They've been paying a steady dividend for about 7 years, and over the past 5 years, that dividend has grown year over year, roughly about 21%. Taking a look at the dividend growth, as you can see, in 2014 they were paying $1.66 per year, and of course their yearly dividend is now $4.72 for 2020. So even during this downturn, they are increasing their dividend. Of course, one of the reasons why I really do like the stock, in terms of looking at the chart, right? So looking at the financials of the company is doing quite well. But the question is the stock overvalued? And I still think that we are slightly overvalued. Actually, looking at, as you can see, I am underweight just by about $1,100. So I've got quite a bit of a gap here that I'm looking to see if ABBVIE is going to fill and come down, which of course will basically make that yield a little bit fatter, especially with the coming years. I think ABBVIE will do quite well, especially if you're looking for dividend growth, as well as some capital gains appreciation, and of course with the price of the stock going up. Looking back at ABBVIE, as you can see, from 2015, 16, and 17, and even parts of 18, the stock had a hard time breaking above roughly $68. And so if we were to see a hard downtrend, as you can see, the market bounced subsequently both of those times here, as well as here in both on August of 2019 and again during the beginning of the outbreak, where you can see again when we see the market pushed down to our major support area, and we see ABBVIE 2 times bouncing off of that area. But if you're looking where to get in, like I said, as we see, the stock has broken down from a short-term support area, I would be looking to add to ABBVIE. Basically, I would say if you haven't gotten in, I would probably wait. I'm basically dollar cost averaging into the stock anywhere between, like I said, about 64, anywhere in here between, I'd say 80 and 64 is a good area if you're going to be trying to average in over the long term to get a little bit more of the stock a little bit cheaper, and you can really maximize that yield over the coming months and years for ABBVIE. I think it's a pretty good stock to have in your portfolio. It pays a really nice dividend, as you can see, $1.18 per quarter. But currently, for me, it is a little too expensive. I do think ABBVIE is going to come down. I actually went short in my Webull account. I actually did go short. I'm short at about $1. I'm short at about 86.50, and I'm basically holding on to my current. I'll probably end up seeing if I can get some coverage here at 80, but I do hold it in my long-term portfolio, and I also hold it in my TD IRA. So I am basically looking to add it to the long portfolio, and I think it's a really good opportunity, something you might want to keep on the radar for the coming weeks and months if we do see, of course, a downturn in the market. Currently, the market is up today, as you can see. Basically, again, trading in that little bit of a channel. We did see a downturn here, basically retesting that 26.5, where we basically bounced over for the past couple of weeks back here in January, in June, July, and some parts of from June, July, and a little bit into the August, and then we ended up bouncing, and of course the market is retesting highs. And so if the market does see a little bit of downturn, then of course we'll end up seeing a little bit more of selling in ABBVIE. I do have a small buy order to go out for today, as my current average is 87. So I don't mind buying 3 points down. I have a small $150 that's going in today, but again, I need to fill that $1,100 gap, and so if ABBVIE comes down, I will definitely keep on adding into that into the portfolio. That's basically one of the things that I'm looking for. If you had the opportunity last time, we did speak pretty heavily about Chegg. Chegg had an amazing rally. I hope you were able, not Chegg. Well, we did talk about Chegg, but we also talked about Chewy. I had made several videos on Chewy about the price points that you want to look at, as well as Microsoft, right? We called out Microsoft at 200, and we saw a subsequent nice rally in Microsoft. Unfortunately, I wasn't able to get the Apple stock that I wanted. My buy order for Apple was at $100, and unfortunately we did come pretty low, but a little bit shy of my particular price point that I felt comfortable adding to Apple. We came all the way down to as low as 103, but I was able to grab those shares of Microsoft, of course, that I wanted. That of course went into my TD because I can put in limit orders, unlike with M1 where you can't put in limit orders. It's one of the reasons why I have both accounts. And so roughly for my long-term portfolio, I do also have an IRA as well, as you can see. And so I'm basically going to put in, because I can maximize it by about 6,000 every year. And so I'm going to put in about 4,500 into this account, and then another 1,500 into my other TD account. And so I can kind of play with the limit orders so that I can get cheaper stock. This is a little more kind of like a set it and forget it. It's just basically every week I just keep on dripping money into the account until it reaches the limit that I'm looking for, and then we'll kind of set it and forget it. Not doing too bad in this account. This is also a little bit more conservative, but every single stock in this portfolio does pay a dividend. And of course, this will start to snowball over the coming years, as my goal is to basically get this account to about 150,000, and then a goal for my passive income dividend account is to get this to about 300,000. I might even push it to 400,000, as my goal is to get at least between 1,500 and 1,800 of passive dividend income every month, as of course I will be utilizing that money for expenses, as my goal is to live abroad. That's basically the video for today. I will be doing another one towards the end of the month. Of course, we will be doing a dividend recap for the end of the month. Should be doing a bit better. The projection should be about 30% more than what we received in our previous month back in September, as October is going to be a little bit better in terms of dividend capture, but we'll be definitely be looking forward to a much bigger dividend month coming in December, right? So basically every quarter we'll see a huge bump in terms of the amount of dividends that we will be receiving. And of course, my goal for the end of this year is to get this account to a minimum of $100 every month of passive income. And then of course, for the coming quarter in 2021, the goal is to get this nearer to 200, maybe 250, with an end of the year for 2021 to have a minimum of 300 in monthly passive income. With that said, appreciate you guys hanging out. If you have any questions or comments, feel free to leave it below. If this is your first time here, be sure, of course, to like, comment, as well as subscribe so that you don't miss out on future content. And of course, you can always check me out. I do post pretty much on a daily basis onto my Twitter account if I have any sort of calls that I call out during the daytime, whether I perceive the market is going to be having a little bit of a sell-off, or there's a little bit of a call during the daytime, as sometimes there's news, and I'll particularly paying attention to that. And of course, you can take a look at that on my Twitter. Feel free to subscribe, and I'll check you out next time. Thanks for watching.